Stock chart data can be manipulated. It can be molded by those who control the system with the high frequency trading. But at the same time, we can use this data that we see in order to paint a general overview, a big picture. This does not happen in one chart, 2, 10. It happens over looking at hundreds or even thousands of charts, which we will do over the course of these years through the videos and throughout your own research. You came here for the truth, so let me unveil that for you. So it is important to look at the charts to understand what's happening within the economy. But by looking, as I said, in just 1, 2, or even 10 charts, you're not going to understand. So when you look at the 200-day moving average, 50-day moving average, you don't get that picture. But once you start putting together all kinds of charts, you get that understanding of what's happening. Let's quickly go through a few that I like here. I want to give kudos to David Stockman for these charts. Household leverage ratio. Couple things I want to mention from this that you need to know is number one, the beginning of the chart starts at about 1950 up to present day. We see an obvious uptrend that has occurred. People, their households taking on more and more debt. They are purchasing cars using debt. They are purchasing homes using debt. They're purchasing little things that they don't even need using debt. And this accumulates over time. In fact, their education even on debt as well. And what we see here is a trend that is for all of the US, but this extends throughout the world as well. The US happens to be a perfect example of this. So that's clear, that's obvious. This has been happening. However, at the financial crisis and afterwards, we do see a deleveraging occurring. Now, is this a healthy deleveraging? Are people saying, you know what, I'm going to pay down my debt. I'm going to get rid of all of this mess that I have. In fact, no, that's not what has been happening. This is people having to claim bankruptcy. This is people walking away, taking the keys, leaving them in the door, and just walking away from either those cars or those homes they purchased with subprime. And this is a problem. Not that they're necessarily walking away from this bad deal that they got into, but further looking into the whole situation, how all of this debt was accumulated in the first place. It's not, let's say, I don't want to say good debt, but better debt, like a home, an investment property that was purchased, and this was, a sound investment to begin with. This is something else entirely, and you know the whole story there. So household leverage ratio, important to look at. Always keep your eyes on that. Let's look at this. Real weekly wages of high school graduates. And you look at the deflated by the Contra Corner flyover CPI, which gives increased weight to medical, energy, food, and housing costs relative to the official BLS CPI, and it goes on. Basically, what we have here is a decline in the real wages. And it's not just this happens to be for high school graduates, but look at this exact chart for the entire nation, and you have the exact same trend. Real wages on a decline, and this can be easily calculated. You can even look at the St. Louis Fed. They have these numbers. So when you realize the fact that people are getting paid less and less and less as the years go on, how do you expect the economy to ever grow? It can't, and that's why we're stuck. That's why I can't understand the arguments for those who are on the other side of this argument, when you simply have no options for growth at this time. Having a few select stocks that the central banks are pushing up does not fix the economy in any which way. Let's look at the next chart here. As you see, the Contra Corner flyover CPI. All you need to know about this is that they are calculating 3% increase every single year. Basically, your money being worth every year 3% less. The index gives increased weight to medical, energy, food, and housing costs relative to the official BLS CPI. We know the official ratings are fake, and when you use core inflation, which is the worst of the worst, they don't even include the most basic of all things. They can change anything from it. 3% is probably not even accurate, but even by that, think about that for a second here. When you're at a particular age, 20, 30 years later, so think about that time that has gone by, your money has declined in its value by whatever have you, let's say 30%. Even if it's 30%, but your real wages have declined, in fact, at the same time. So your money is getting devalued from all sides. Very important statistics to look at. And let's get into this. The shrinking pool of workers with a high school education or less. Now, this may be good, maybe bad the way you look at this. This is from 2007 to 2016. What I would suggest about this is that there is a large amount of the population which is high school educated. Even I would like to talk about college, university education, which they are getting. And you may think, look, that's good. The more university graduates there are, the better. But what is the purpose of this education when they are unable to use it? That's something that I'd like to cover just briefly here. Right here. Student loans owed and securitized outstanding. And this is the most straight up chart I've ever seen. If I can't even fit it all on the screen, but you have a perfect line upwards. This is accumulating at an almost mathematical degree. This is like a ruler line upwards. I mean, it's amazing to see how straight this is going. But basically what we have is individuals taking on more and more debt in order to go to school. Then they get out of school. They're unable to pay that debt because they're unable to find a job which they went to school for. Or you have a situation where they are taking on too much. They're going to the wrong fields. They're taking the wrong thing. They're living with their parents. We've seen all these statistics. It's a big mess what's going on. And that is just another indicator that we need to keep a watchful eye on. So that's it for this video right here. If you found it informative, please give me a thumbs up. Last but not least, just want you guys to go over to themoneygps.com, check out the free ebooks that I have, check out the free eCourse that I have, always giving out free information. So please take the time to look at